All right, what's up, everybody? Welcome to the weekly right over here, High Performance Trader. We're gonna break down this crazy week ending in May 14th. We're gonna break down tons of trading strategies, tons of things we've seen this week. I've seen a lot of gap fills, a lot of the break and retest. Right, the break and retest has literally helped me grow so much as a trader. I can't believe I made it this long. I really didn't trade the break and retest the way I trade it now up until like last couple months ago. And I'm telling you, the break and retest has helped me identify who's in control of the market so well that I pretty much use it every single day to understand the overall like direction of the market. And I'm so thankful to have implemented the break and retest into my life, man. It's so crazy, Todd. I know we talked about the break and retest like crazy before, and I just can't believe how well of a trading strategy it is. It's nuts.
Yeah, I love it, man. When I see it coming into the levels, breaking it, and then I was thinking about going short, and then it breaks it, and that stops you from chasing it.
Yeah, absolutely. And then like I'm gonna run through Friday real quick, and just kind of really break down how I use this. So the break and retest, right? It's really good strategy because there's not specific criteria to it. It's a very simple strategy, and we talk about these strategies being simple. And any strategy that is simple, those are the strategies you must use, right? So I'll kind of break down how I was trading Friday. So Friday over here on the QQQ, I'll pull SPY up too. I think SPY had it a little bit. They were both very well. So the way I do this is I identify pre-market low and pre-market high, and whatever one gets broken, that is where I draw my line, right? So you got pre-market low over here, 413.21. We'll just focus on SPY real quick. So look how clean this strategy works, dude. It's amazing. So we got 413.21, right? Price comes down, test it, right? This is where buyers first try to step up. And you can see though, like you see those wicks below pre-market low, that is a strong indicator that sellers are there, right? Because pre-market low wasn't like defended to a T. And then you get this volume right here, and then we break right below it. And once we break below pre-market low with this volume right there is telling me, all right, sellers are here to play. And there's not any demand. I didn't have any demand on SPY up until yesterday's highs, our prior day highs, which was literally 412.35. And another thing that goes into this strategy is the gap fill. So I just made an end of day rejection little mini course. And what I love about the end of day rejection and these break and retests is this liquidity gap. So we've talked about this before, but without getting too far off topic, we get this massive volume every day at end of day. And what that does is create tons of liquidity. And what liquidity really is, I want to really flesh that out, is for every buy order, there must be a sell order. For every sell order, there must be a buy order. So with all this volume going into the end of the day, you get all these orders that don't have an opposing buy or sell order, which creates tons of market orders around end of day, which is why when price opens well above end of day or below, price will tend to gravitate towards it, closing that gap, right? So with that in mind, we're opening well above end of day on Friday, right? We got all this liquidity down here next to end of day. Look at the volume, but it just shows that sellers were just way stronger. But that is why price will gravitate down towards it, right? Because all those market orders that tried to go in at the end of the day and didn't get filled, they still need to get filled. So price will gravitate towards it. We get this break below pre-market low. Price comes up, tags VWAP. And one thing I've noticed on this break and retest strategy is VWAP plays a heavy role in it almost every time, right? So you got VWAP, you got pre-market low, we break below it, we get these wicks. That's a short play all day. And this strategy takes some faith. I'm not gonna lie, because price will rip right into it, and you got to be like, all right, I'm going short no matter what. What do I need to go short? Because one thing that used to hurt me on this strategy is I would wait for way too much confirmation, right? It would rip into it, and I'd be like, oh, well, how do I know sellers are here? And pretty much on this strategy, I'm going off the 1 or 2 minute, right? And I got that from Utah, that 2 minute candle that blows out the other one. Let's just pull that up, because that's a great way right there to let you know who's in control, right?
Yeah, on that 2 minute, it had two of those I don't know what 2 top and tail bars in the 2 minute.
The shooting star or whatever.
Like and he had 2 of them back to back.
Yeah,
that should have been the telltale sign.
Yep. And then how this ended up working, right?
And then like you said you said that VWAP, whenever it lines up with that break and retest area, it's like kind of like almost doubling your layers.
Confirmation.
Like I call them stacking the odds again.
Absolutely. Yeah. Look, you got pre-market low over here, and you got VWAP, and I've noticed every break and retest I take that's matched up with VWAP is usually a slam dunk, right? And so look at that. We got that perfect little I'll just call it a reversal candle, right? A doji. Rips into it. Buyers try, can't hold. This is when we break right below that. This is when we first enter the trade. Now, if you pull up, I'm going to pull up QQQ as well. So this is what QQQ looked like. Now, this one's a little different, but I want to go over it because this is not pre-market low. But this is still an area I'm looking to break, because you can see it. Price opened up, kind of rallied, rejected off supply up here, comes down, buyers showed up. So once I see buyers here, I'm going, hey, if sellers can overcome this area, that's telling me that market conditions are bearish, right? So price breaks below this 32657, comes way below, bounces off end of day, but end of day did not look pretty here, right? It ripped way below it. It just wasn't what I wanted. That's not the end of day rejection I like. You know what I mean? This is price rip right below it. Rips right into this 32657, and sellers just powered through this, man. It was wild. And I literally wrote on this day, I was like, beware of bull traps. Days like this, the bulls try to show up, but they can't. It's just continuous traps. I mean, look, you got a move out of demand here that looked kind of appetizing, and then sellers just took control, and it was just all day sell. And that's why I just love this break and retest, though, because it really helps you understand. If you see this sort of pattern right here in the morning, beware that sellers are in control for the rest of the day. Like, if I see this pattern in the morning, I won't go long until something really looks appetizing. And and I ended up going for a long on where was it? On Friday. Right after I wrote that. It's crazy. I said, beware of bull traps, right? What do? I go long. And you know what I mean? It's literally what I go, beware of bull traps. And then I seen this move right here. And I was like, or I think it was on SPY. Let me see. Yeah, it was on SPY. Hold on. So on SPY, I seen this little move right here. And it's so crazy how these market imbalances work, man. It's nuts. But on SPY, we broke well below end of day, which was another indicator to stay away from longs. But I still went for it. I caught a quick move up to VWAP, but I only sold 30% of my position. Where was it? Oh, it wasn't up to VWAP. But yeah, this little move. Oh, actually no, it was this move right here. This is the move that got me. I went long around here, and I just got crushed. But if you look, it's multiple break and retest, and this is just what I love about the strategy here. I mean, you get a break right here, right? You get a break right here. And it'll just break and retest all the way down.
Yes, indeed.
Yeah, so that's that right there. Yeah, I love that.
Yeah, on that same day, you was talking about the QQQ, and it does look a little different than the spot.
Yeah.
And that QQQ made it in the morning on the smaller time frame. It made that lower high.
Yeah.
You know, before the break and retest on the spot, that QQQ made a lower high,
yeah,
so it was
yeah,
already
yeah. Hold on,
starting to trend down.
let me pull that up. And it's so crazy, but those little indicators will tell us everything, right? Oh yeah, right there. Yep, price ripped up, came down, couldn't make a higher high, made a lower high, bam, cracked right through. So and I just I used to trade reversals all day every day. That was it. And I think it's really important for every trader to know you're not going to catch a reversal every day. You're not going to catch a break and retest every day, right? But what makes the trader is being able to adapt to what's in front of them, right? So when you see a move like this, and we're going to break into it like on CPI and stuff, but when you see something like this early morning, right? Don't assume that just because price is selling off into a demand zone that buyers are going to show up. It's really important to let what's in front of you dictate what moves you're going to make, right? And I know it's kind of contradictory because we go through pre-market plans every day. We go through goals and if then statements, right? But it's just really important for everybody to know you as a trader, you need multiple tools in your bag to be able to adapt to these conditions. And the only stuff you need is price action in front of you. Like when you get this break below pre-market low here in a massive sell-off, right? When you see a move like this, I don't care what it is. I need valid confirmations for longs. You know what I mean? And we just never got it, right? Like one thing I'll do, and this will kind of skew my risk to reward, but so you get this sell-off here, right? And it comes right into this demand zone, and bounces right off it, right? So this and then makes a lower high. So this is kind of like, hey, this isn't a bad entry for a long right here, right? But considering, right, this little arrow, that's like, hey, this might be a good long trade. But considering we're in a downtrend, for me to go long in this, I need to see a break above either VWAP or I need something to invalidate this break and retest because that is what's strong right now. And you can see we never got it. Right? We never got it. So, like on a day like this, for me to go long, I want to see heavy buyers stepping up above VWAP. And yeah, that'll kind of keep me from getting the best entry on a reversal. But what it's going to do is protect me from current market conditions. And we've talked about this before, Todd. All my losing trades is me trading against market conditions. It's crazy. Like 90% of my losing.
Yeah,
you know
that's me too. Mine too. And I know I was slacking on my logging, my trades and stuff, but 2 weeks ago I started printing the chart out every day because and I put it in a binder.
Nice.
And then I get my paint markers and I mark on it what's going on, where I will take entry and where I did, and then it's like, oh God, I'm so late to the trade, or I'm too early, or I didn't have patience. Like it really puts everything in perspective.
Oh, dude, it's an absolute game changer, right? Like we talked about it before. It doesn't matter to me how you do it. All what matters is that you do it. Because I've traded for a long time, and the first couple of years I didn't log anything. I literally was under the impression I could just show up to the game and crack it. And this is what was detrimental, was the fact that I was trading well without logging my trades, right? It kind of put it in my mind that I didn't need to do it. But ever since I started logging, and then I'll realize every one of my losing trades is me going against the grain, right? Going against the conditions. And all what I mean by that is when you are in a downtrend, go short. When you are in a uptrend, go long. Like it's that simple to me, right? Like that's it. And I know as a supply and demand trader, when I first started trading supply and demand, it was nothing but reversals, which is in a nutshell trading against market conditions. And I'm not telling anybody not to do that because some of my best trades are reversals. But in a nutshell, just increase your criteria it takes to make those reversing trades, right? And we're going to break that down on CPI right here. Because the number one thing is to be able to adapt to your market conditions, and that's gonna help you be way more profitable.
Yes, sir. I love the reversal trade too, and
yeah,
I didn't reverse trade until I joined the Discord and started learning about the supply and demand, and I realized I needed that in my arsenal too. Definitely.
Right. And that's
in between the supply and demand. That's where the money is made.
Yes.
Is in between those levels.
Yes.
If you can pick the right direction in between those zones, you're in good shape.
Absolutely. And it's just like, and the biggest thing is just understanding what's in front of you, right? Like I know hindsight's 2020, right? Like I'll have a losing trade and I'll look back at it like, what was I thinking? And that's fine, because at the end of the day, what's important is to be able to see what's in front of you and trade with it, right? So we're gonna jump right into we're just gonna run right through the week. Let me see here. There was a couple struggling days because we had CPI. All right, so this week started on the 8th. Okay, so let's see here. So we had some really low volume days because CPI was on 510, but there was still some good opportunities right here. Monday was a great day. All right, hold on. Let me just bring this out to the 10-day, 5-minute. And we're going to get into CPI because CPI was a really good day. Okay, so this was Monday. Okay, so the levels I kind of had here, we were in a solid uptrend, right? So my goal was to go long as we could stay above specific levels. And that's another thing I want to touch on, right? Is I'm looking for longs as long as we can stay above specific levels, because as intraday traders, we're consistently looking on these smaller time frames, right? But I like looking at this market on larger time frames as well. So Monday was right here, and we had this breakout over here on the QQQ. SPY kind of looked like this, right? So it was kind of similar. Let me just draw that trend. QQQ has had much more strength than the S&P 500. I'm sure a lot of people on the Discord have noticed I've been trading QQQ a little more. And it's just because it's kind of been fitting my criteria. And I don't want anybody to think, oh, he's trading QQQ more. I got to too as well. It's for me, it's all about whatever's fitting in my strategy, whatever's fitting in my criteria. Whatever trade plan I come up with, if I see it in front of me, I take it. So that's all what that is, right? There's no right or wrong commodity. I don't care if you trade Bitcoin, Apple, it doesn't matter. It's all trading strategy. So I had this, I noticed this little breakout here on QQQ. This was Friday, right? Buyers really came in, but we had this supply zone, right? Because on this breakout, it'll usually, okay, so when you trade a breakout, right? We got this little breakout here. Your target is usually the high, right? So that's exactly what we hit on QQQ. Another thing I've been doing, Todd, that you helped me learn, was I'll whip out the Fibonacci retracement, right? And then I'll draw, and now we're way above the 50. So that's telling me the conditions are very bullish. And notice I'm doing this on the 1 hour chart. This will give me an overall context of which direction I need to trade, right? So we got this breakout, right? We're well above the 50% Fibonacci retracement, right? So my goal is I'm looking for longs as long as we can stay above this 320.88 area, right? That's where I'm going. Hey, if price comes below 320.88, and then I'll look for shorts. But as long as we're above this, I'll literally make it. I'll put bullish above, right? I'll make it green, and this is how I'll go into the day. right? So then we got that right there. We got our areas mapped out. And now as long as we could stay above that bullish above area, right, I'm looking for long. So this was another day where the reversal. All right, so I'm just going to go step by step. So then I will identify our pre-market highs and lows, right? So then I got that guy, and then I'll duplicate, and then I'll hit this guy. So now if we these are areas I'm looking for buyers or sellers to control, right? And you can see here we got the break and retest lined up with VWAP, right? So this was my first trade right here off this break and retest. Now notice this trade was not successful for me. So let me just break out how it went down. And it all comes down to not trading with trend. So let me whip out the 5-day 1 minute over here and go back. Okay. All right. So now we're good. So my goal here was to take the market short all the way down to this 321 area. So this is what it looked like on the 1 minute. So it broke below, right? And the way the break and retest works is you don't just chase it. You must wait for the retest, right? So the price comes up, retest, right? I take the market short, and it was just kind of, and this was buyers defending market conditions is what it was, right? So I take the market short, comes up, touches the VWAP again, makes a lower low, but you can see it tag that demand zone, right? Which wasn't really the clearest demand zone. Price then reversed and I got stopped out, right? And that's going to happen. It's completely fine. I'd take this trade again. But actually looking back on it, we're above my little bullish above indicator. So I had no reason to go short. You know what I mean? That would have been my first mistake. Is, on that 1 hour time frame, I already identified an area that I am bullish above. So I have no business going short, right? And that's why I believe this trade didn't work out, because we were still on a larger time frame. Bulls were still in control. So since I was looking for shorts here, I missed the fact that we were making a pretty nice double bottom in a demand zone, right? And then price just rallied all the way up to that previous day high. So that was one.
Yeah, that's what we talked about so many. Yeah, that's what we talked about so many times too. That like where the action is. I mean,
yes.
You're right where the action is. You see the same short would have also been the same good long.
Yeah, right. Yep.
The break and retest. So we getting good on our where our action is.
Absolutely.
I mean, that's
absolutely. Yeah, absolutely. Right. Like, so that was definitely an area we were looking for buyers, right? And and it's just all a matter of profit taking as well, because at one point I was up around 30%. And this right here should have been a smooth indicator to get out of the trade, right? And that's why it's so important to be able to really identify these conditions, because here I'm looking short, right? And I'm up 30%. But if I was holding true to my bullish above indicator right here, right, I'd have been like, all right, I need to take that off the table. And I mean, in reality, I should have stayed away from a short position here. But I seen my criteria, went for it. And what I love about the break and retest strategy, though, is I literally only got hurt for around like 2 to 5% on this trade, because once we're above that level, that's my stop loss. Stop loss triggered immediately. I'm out. I'm not even hurt. You know what I mean? And then once price comes down for this VWAP, right? And now what I love about the break and retest, though, is look how this level still plays such a vital role, because now price rips up, comes down, retests this area value, right? This is where support now becomes demand, right? Clear indicator to take the market long here, targeting that overall imbalance or pre-market high, which we ended up ripping past, right? And then, then market just kind of did some craziness. But yeah, that's why it's really important to have a super simple criteria before every day, right? So, and on the 1 hour, right, we broke out of this breakout. We're well above the 50 on the Fibonacci, right? There's really no reason to take market short unless you're going for a very quick scalp, and that's it. And then the next day was nothing but garbage because there's literally no volume here. I'm not sure I even made a trade this day.
Man, I took 2 trades and then it ate my lunch.
Yeah. Well, look at that.
And then I was done after that.
Yeah, I mean, look at this volume, man. It was nothing there. It was just kind of, it was a mess. I mean, if you pulled a trade out of this day, no doubt. But yeah, that was nothing really good there. I mean, let me just see real quick. We had this demand zone here at this 320, this 321. But yeah, we'll just break right into the CPI day. Now, CPI, this day was really, so this day right here was really, it provided a lot of opportunity, right? So I'm going to pull up SPY on the left and then QQQ because this day was pretty wild, right? So I had this level on SPY, this 413.87, where if we can hold above this level, I was super bullish and I wanted to play long to 417.07. So that was my first way of looking at it. But you can't forget here this massive liquidity gap fill, right? So this rips right up into this area. And now I just broke this down too. So what I love about this gap fill or the end of day area is all this volume that goes into end of day, right? We get 20 million shares being traded every 5 minutes. All these market orders need opposing market orders, right? So for every buy or sell order that goes into the market at the end of the day, there needs to be an opposing buy or sell order. So a lot of those don't get filled and they just sit there patiently, right? So you get all this volume, but not everything's filled. So what that does is it makes the market kind of gravitate back towards that area because there's a massive demand imbalance. So there's a large demand of orders that's going to get filled over here at end of day. Now that's just how this day played out, but we get this massive move to the upside, and then let me just pull out the 1 minute because I actually had one of my best trades in a long time on this CPI day, right? There was a beautiful head and shoulders. Once again, look at the difference between SPY and QQQ. Now, SPY I had this super strong level. I was looking for longs above it, right? But price could not hold above it. And this level played a perfect break and retest, right? Broke below it, came down, sellers defended it, and a perfect move to the downside, right? Blows past end of day, everything. But QQQ was the one I ended up trading, and price kind of, and dude, and these days are so crazy because price is literally moving 30 to 40 cents a minute, right? So you got to be really careful on days like this because you could get hurt. But you can see this little head and shoulders we had, right? So SPY's in a super large downtrend, right? We're just selling off massively. The break and retest was defended. QQQ was a little different. So price literally is forming this head and shoulders, and then we make that lower right shoulder. And I got my trend line right here. This is when I first took the market short, and this was like 118% return in like less than 15 minutes, right? I mean, look at this sell-off. We went from 325 all the way down to 322.4, which on a $2.50 move on QQQ is massive, My target on QQQ on regular trades is usually like $1, right? So this was a super sell off. Now, I just kind of want to break out how I get my entries and my exits on this trade. So you have this little demand zone down here, right, where buyers showed up previously. We're looking for shorts right here. I enter this trade short on this candle, right, because it blows out the candle before it, and we have a lower high, right? So my stop loss is literally at 325.25, right, which I'm getting from right here. So I'm literally risking 30 cents to make a potential $2.50 move. This is great risk to reward. Now, everybody must do risk to reward before you enter the trade, right? Because if you're taking trades where your stop loss is $1 away, you're gonna get hurt. Those trades leave you vulnerable, right? So as intraday traders, right, we do not want to leave ourselves in vulnerable scenarios, right? So that was my methodology going into this trade. You got your left shoulder, your head, right shoulder. We break trend, right? So that was another very nice indicator, right? That sellers were in control. And quick move to the downside. This is where I got out of the trade, right? Once I seen this little green bar, and yeah, it was perfectly done. And I kept it very simple. You know what I mean? It wasn't a lot of complexity. Like it wasn't complex at all. There's a head and shoulders chart pattern.
Beautiful.
Right? There's a head and shoulders chart pattern. And if we make a lower high, I'm going short. My stop loss is right here. My target's down here. Let's get it. And bam, that was it. So that was really, really well done right there.
I took that same trade. I just I guess I took it a little different.
Run through it.
Like I told you, I don't know, a couple weeks ago, whenever there's news out or some kind of numbers coming out, I use the fibs a lot.
Yes.
On the number days and the news days. On that QQQ at the head, where you said the head and shoulders.
Yeah.
I pulled the Fibonacci from the top to the bottom.
Wow.
And that's how you took, but
yeah,
that was kind of what I was looking at.
Yeah, that's beautiful right there.
And that most of the time I think Fibonacci, but if it's news or some kind of numbers, I start using them.
Well, a lot more. Well, and what I really love about the fibs is they help you understand who's in control. Like that's it. That's all they're telling. You know what I mean? That's all they're telling you. They're going, hey, here's the high, here's the low. If buyers cannot get price above this 61%, that means sellers are in control. And look at that. That's a perfect bear flag, right? You got the pole, you got the flag, boom, right? So and then check it out, right? So if you were going to use your fibs here, you wouldn't have entered because price then rips right past your Fibonacci, so there's no point to get in, which is telling you buyers are in control. So, the fibs work phenomenal, absolutely. Because, and one thing I'm realizing the more and more, right, that I just trade, is it's all about understanding price action right in front of you. Another reason I took the market short here, right, is because the break and retest was happening perfect on SPY. Now let's just whip out the 1 minute on SPY because there's a lot telling us here on SPY. I'm actually kind of I'm not going to say I'm disappointed in myself for not trading SPY because it really doesn't matter, but I just can't believe I didn't identify this on SPY. So SPY, check out this head and shoulders right off the rip. I mean, it's perfect. Look at that. Dude. And I think it's because I haven't been trading the 1 minute at all. Like I really only look at the 5. But if you look at this right here, I mean, what's this telling us, right? This is telling us there's massive buyers. Now with a large gap up, remember that gap fill usually happens. That liquidity fill is a play, right? So you get massive selling right here at this left shoulder. The neckline on the head and shoulder is a little deeper, right? Which is a perfect indicator that sellers are getting larger, right? So that neckline right here comes all the way down to 413.8. Neckline over here is at 414, right? So sellers are stepping up. Massive sell-off, right? Comes up, retests this 413.80 level, and remember, I got that level that was my bullish above level, right? So that level literally came from, let me see, this breakout, right? So the way where I got this level here was if we can hold above 413.80, I would be looking for longs, right? So because if we could stay above this, that's a perfect break and retest. So if we could break this resistance and hold it, I was considering the market to move all the way up to 417.07, right? But we couldn't hold above it, right? So, but it's so crazy how that level still played such a vital area of value, right? So let me just come back. Bam, look at that. So that same level played such an important role, right? Sellers defending it. And now what I'm doing here is letting a level tell me who's in control of the market. If buyers defended this level, you know what I mean? If buyers defended this level, market was going to rally. But if sellers defended it, she was going to sell off. And it's just so crazy how when you look at this as an auction, right, the value this price action is giving you right in front of you, right? Now look at these reversal candles right here. Perfect break and retest, right? And as this is happening, I'm going, hey, SPY sellers are in control. So I identify this head and shoulders. We made this lower low. You know, there's just so many indicators that sellers were in control here, and that's literally what happened to a T. And now check this out. Now this is what's even crazier. So we have end of day down here at 32159. Now I literally just made an end of day little video on this day because of how clutch this worked. Now, let me just make this a little bigger because this if this was the best end of day rejection, like this is why I love this end of day strategy. Okay, so you got end of day over here. Look at the volume, right? No volume all day on the prior day, right? You literally get tons of volume at that last minute, all those market orders that need to be filled. So we don't know if it's going to be sellers or buyers that are in control. All we know, there's tons of orders that need to be filled. So in a bullish scenario, we want to see buy orders getting filled at end of day. We get this large liquidity gap up. Let me just take off pre-market data because it literally makes it look so clean, right? So we get this large gap up here, massive gap up. Now, literally, we need all this area has potential to be filled, right? Because there's massive liquidity. There's massive open market orders at this 325 or 32159 level. So price literally gravitates towards it, which means there's more supply than there is demand, right? But once price hits this, look at this volume, right? So CPI had massive volume all day, right? But look, buyers were not here until this price level. They were, but they weren't overpowering the market. Once this price level got hit, look at the volume that came in here, dude. It was massive, right? Way more volume. Literally tags end of day perfectly, right? And all those previous market orders, all that liquidity now needs to get filled, and then you get a massive rally capturing the market imbalance, right? It's a perfect picture perfect end of day rejection right here. It's wild.
Yeah, don't get no better than that.
No, yeah, look at that. I mean, perfect. It was crazy. And I guess the reason why I love that strategy so much is it really just paints that market auction for you. You know what I mean? Like it's literally, it's so crazy because sellers are, you know what I mean? Sellers are in control here. Buyers are trying, but look at how strong these buyers show up once it hits end of day. I traded this day a little different. I did not go long at end of day. I went long once we held above this break and retest right here. So I wanted price to make a higher high. It's exactly what happened. We VWAP'd right above. We both flagged right into VWAP. It's when I went long, still capturing a $3 move to the upside. Like, phenomenal trade here. Now, the way I traded this here is my long is off this break and retest. My stop loss is literally right below it. So it doesn't matter how you traded this. You could have traded it. Obviously, you went long at the end of day. You would have made 1,000%. And just this CPI day was really just offered so much opportunity. This was such a good trading day. So yeah, it's really good. But SPY was.
Yeah, I kind of took the same.
You noticed, Todd, how different SPY was? Like SPY fell way below end of day. Look at that.
Mm-hmm.
SPY way below it.
Yeah. Way below.
And I think SPY. I think there was. Let's see. Let me see something here. I think there was some demand.
That's why I always start. That's why I always keep my charts. I got SPY and QQQ right next to each other.
Yes, sir.
Like we said before, one of them's going to tell you the story.
Yeah.
You just got to figure out which one.
Yeah.
Give it to you.
Absolutely, man. And that's why I just love. I love the whole idea of just keeping them both up, and whatever one fits your trade plan is perfect. Because one thing that I keep noticing the more and more I'm on this market is my better trades are the ones with market conditions. They're ones that I have strict profit or my risk reward ratios, and that's it. I mean, SPY. I did not really like SPY this day because we broke well below multiple demand zones. Even on like short play right here, say you went short below pre-market low, we just hit this rant. Well, once QQQ hit end of day, this pulled the market right up with it. Because SPY's breaking multiple demand zones. QQQ just showed up with strength here, and you're going to see that a lot. One of these is going to either pull the market up or down. And there's not, QQQ isn't more powerful. SPY isn't more powerful. They're just two tools that you need to use to make consistent trades. That's it. That's how you got to look at it, right? They're just two tools that make you money. Nothing else. So this hold on. Hold on, fellas. All right, my computer just almost died. All right, my charger was plugged in, but it wasn't. All right, so okay, so yeah, that was it. I mean, CPI was a beautiful day, offered tons of opportunity, and we're just gonna break into the next day here. Now, and getting rid of that pre-market data really helps me to make really good trades. So all right, so let's see here. So SPY, this was the next day over here. Let me see. And now another thing I've been doing, right, and I know I say this all the time, is you used yesterday's highs and lows to help you get in and out of the market successfully, right? So this next day, right, we're going to highlight SPY over here because SPY had a gap down. And I just want to break into the importance of those gap downs again. So hold on, and it's crazy because previous end of days will play a role even the following day. And it's literally because all that liquidity still needs to be filled. So, okay, so let me just got SPY over here. Let me get rid of pre-market data. Okay, so this was CPI. Let me get this massive move, this small gap, but still a gap, right? We get this massive move, sell off, and then we kind of come down into this 410 area, which was pretty vital the day before. So what I was looking at, I was kind of looking at an inverse head and shoulders here. So you got your left shoulder, head, and then you got your right shoulder. Which, remember, chart patterns are nothing but selective human behavior, right? They don't need to be perfect. You just need to see areas, right, where you're making a higher low, right? So you got your low, your lower low, higher low, right? So, and now you got this gap down, and so I'm looking for longs right in this 410 area, and that's, price comes down into it, consolidates very well, and then just like we just seen a higher low on that 15-minute time frame, now we got a higher low on the 5-minute. So I end up taking the market long right here, and price then and in this trade, I'm literally targeting the open, right? And I know we talked about this before, but actually, I think in the Discord I said I was targeting the gap fill, but I think my first target was the open. Now, remember, guys, this is a $2 move, right? 410 to 412. This trade right here is 87% return on your investment. You do not need home runs. Like, I mean, that is a home run. You know what I mean? A little $2 move. That's it. You don't need to capture $5-6 moves every day. The very successful traders, I know for a fact, capture these moves every day. These $2 moves, these $1 moves, right? These $1.15, $1.50 moves that pay 30 to 50 to 80%. It's literally that. That's all you have to do. And I say this, and I'm speaking for myself, because on a day like this CPI, where you capture a $4 move and you make 150%, right? Don't let that alter your mind frame and your trading strategies, right? Like, you literally need this low hanging fruit. These little $2 moves right here are going to add up. They're going to build consistency. They're going to help you build your mindset to become a confident trader, right? We talk about building that conviction, right? That conviction literally comes from these $2 moves, or $1 moves. I mean, even if you call it this little break and retest off pre-market low, right? It was literally a $1.50 move to the downside. That right there would have paid you 50%. So, just,
yes, indeed.
You know what I mean? Like, that's it, Todd. That's all I'm looking for, is these little low hanging fruits. And you don't need to trade a lot.
Yeah, it's funny you say that, because I was thinking the same thing. I think about this shit all the time. So I was sitting there thinking, okay, if you can make, because trading is like the most scalable business that I've ever seen in my life.
Exactly.
All you do is that.
Yes.
You do the same thing if you made $200, and you do the exact same thing to make 20,000. It's
Yes.
the exact same process.
Right.
All you do is add more contracts, but you're doing the exact same thing. That's
Yes.
why I love it.
Yeah,
it's so scalable.
Absolutely. It's literally what do I need to do to make money, and then it's not what do I need to do to make more money. It's literally going, hey, this makes me money on one contract. Let's do it on 10. Let's do it on 50. Let's do it on 100. Like, I know everyone, like on Instagram, right? I follow a lot of traders that, $1 million traders. And I'm thinking in my head, they're not doing anything different than what we're doing. They're literally breaking, retesting, but with 1,000 contracts. You know what I mean? That's it. Literally, and that's why so many traders talk about this, right? And I know we do constantly, is figure out your process, right? Figure out your risk reward and just trade that, right? So one thing I've been doing, now I know it's kind of controversial, everyone does it a little differently, but what works for me, right? Because I took this little break and retest right here, because it lined up with VWAP perfectly. It broke my pre-market low, right? So I took this trade, and then I also took this demand rejection, right? So here's 2 trades. Now, on each trade, I put in a stop loss that would be triggered not by my ability, right? And what I mean by that is I buy my contracts right here for $100, and this is just for example. My stop loss here is, and so I'll buy 10 contracts, right? So I'll put in $1,000, $100. I will make a stop order for $87. So if this trade goes against me, $13 an option, I'm out. That's it. That's all I'm willing to lose or risk. Now, so I know that's a dollar amount, but I also know if this trade holds above VWAP, those options are going to be worth around $85. So I've literally been doing this long enough to the point where I can put in a specific dollar amount on my contracts, and I'll know where price will, like, if price goes above VWAP, bam, I'm out. If I wait to make this trade mentally, right? Now let me just break this out a little further. The way price action moves so fast, you will get hurt if you do not make your stop losses correct, right? So basically what I mean by that is this is what the trade looked like. If price ripped above this 411.49 area, price would have ripped all the way up to 412 in a millisecond. You know what I mean? Because all those stop orders and all that breakout, right? And now those contracts I bought for $100 right here, it would have rallied up to here and been worth probably 65, right? I'd have lost $450, give or take. So, especially for the new traders out there, or any trader, I don't care how long you've been trading, put in hard stops, right? Because it's all about defense in the market, right? Offense makes us the money, but defense saves you money, right? Because we're gonna make losing trades. It's how much you lose in them that's going to relate to your success. You know what I'm saying? So if I allowed a $400 loser on this trade, that's $400 I need to make back on my winning trades, right? So I think I wrote it in the Discord. It literally, let me pull it up because I heard this quote and it really hit me. Let me see here. I put it in. Let me see real quick. Let me see. Hold up. Trader chat. All right. I literally put. Hold on. Market philosophy. Okay, I put it's not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. Makes you important. You know what I mean? So it's just really important to be able to cut your losses quick. You know what I mean? Super important. But yeah, so that was my first trade, right? Quick little $1.15, $1.50 move to the downside. And then once price cannot make a lower high, right? And remember, Todd, we talked about this. This is when I get out of my short trade. And the reason I'm getting out of my short trade is because now this is a good long trade. You know what I'm saying? So I want you guys to ask yourself when you're in these trades, if you're in a short trade right here, what do I need to see to take the market long, right? That's where I'm going, hey, this is where I'm getting out of the trade, right? So this is where buyers really stepped up in demand, and then price then rallied all the way up to 412 and, stopped me out of that. And then price literally comes all the way down back to demand. Look at the volume, right? Buyers defending that demand zone strong, right? So that was another perfect little I didn't make that trade, but I just love looking at the market imbalance right there, right? The demand of shares is extremely high. So this one, sellers tried to take the market down, couldn't. Buyer stepped up, boom, and then that leads us right into Friday, another massive gap up, and we know what gap ups mean. Hold up. Gaps mean fills. So yeah, we get that massive.
Yeah, especially when they gap way up.
Yeah, gaps way up there. And another thing that leaving that pre-market data off. Look at this head and shoulders. You know what I mean? Look at that. Left shoulder, head, right shoulder, boom. Done. It's just I highly advise everybody, right? Because we're constantly making moves off yesterday's highs and lows, right? So I would be first looking for longs here about if we bounced off previous day high, right? But we didn't. We sold right through it. So now I'm using that as a break and retest, right? Break, retest, sell off, right? And then we sell off right into this end. You know what I mean? Boom. And then we just kept selling off. So that was a beautiful day right there. Once again, that break and retest right off VWAP, clean indicator, right? Take the market short, and then broke right below yesterday's lows, and be careful, or yesterday's highs. So be careful, right? For all the traders out there that really keep an eye on yesterday's highs, right? So let's just play that out real quick. So we got yesterday's high. So this is how I do it. I'll draw a demand zone here. Let me just get rid of that. So the way I want to see this gap get filled, right? So price falls off below. My first target here would be end of day, right? Which is 412.15. So in this short, I'm targeting end of day. Price breaks, rips right into yesterday's highs, right, at 412.35. But sellers just muscled right through it. So if and when that happens, what's that telling you? That's telling you sellers are here to crush this day. Yeah, that's telling you target the opposing market imbalance all the way down to 410. And I wrote in the Discord here, I said, if buyers don't show up here at 412.50, sellers are probably going to be in control all the way to 410. And look, that's literally what happened. Sellers were all the way in control way past 410. Right? It was a massive, just continuation of break and retests. And I took profits here at end of day on this short, and like I said, it was still a $1.50 move. That's like 80. That's like 50 to 80%. So remember, we don't need these slam dunks. You know what I mean?
That was a nice trade.
Yeah, that's it. And I do it to myself. I tend to overcomplicate things. And if any trader out there does that, don't feel bad, because it happens. But I know, Todd, me and you talk about this all the time. The simpler the trade, the better. You know what I mean? Like,
better.
Look at that. Gap fill up, broke this little area in pre-market, boom, go short. Keep it tight, stop. Right? Like, I want everybody this week to try some different things. You know what I mean? I used to hate these VWAP rejections. now they're my go-to.
Yeah.
Yeah, that's really good.
Yeah, I'm still having a little bit trouble staying in trades, but I'm slowly getting better, trying to stay patient.
Yeah.
In my winning trades, I just need to stay more patient in my winning trades. I have no patience for my stop loss. It's where it's at. If it triggers my stop, I just look for the next entry. But my biggest problem is staying patient in the winning trade, which is kind of backwards, but I'm working on it.
No, yeah, and it definitely takes time. So one thing, I know we talk about it. One thing that worked for me is I lowered my position size, right? Because I would go, man. Once I made around $500 to $600, $700 a trade, I was out no matter what, right? I was letting a number induced variable get me out of my trade, right? I'm going, man, I made $500 today. I am out, right? So that's how I used to think. Then I dropped my position size down, right? So now I'm going, hey, for me to make $500, $600, $700, I need to stay in these trades longer. And then I realized that these market imbalances get met constantly, right? And it is hard, because this is, it's a human emotion, right? We're up some money, we want to take that. We don't want to be wrong. We want to lock those in. So it definitely takes a lot of time. But one thing I do is just find little niches to stay in them, right? One thing we've talked about is the 9-day moving the 9-day moving average on the 5-minute works phenomenal, right? So you're in this short until a candle closes above it, right? So look at that candle, just can't close above it. That have kept you in for around $2.5. Just try to find little ways. And you know what, Todd? At least you're not letting losers run. You know what I'm saying? So I'd say you're on the right side of the coin.
Yeah, I'm not doing that for sure.
So,
but I keep, like I said, like I always say, I keep them real tight. So
yeah,
sometimes I do get kicked out, but you can't let it mess with your decisions to being on the right side of the move.
Exactly.
Say it kicks me out and it stops me out, I can take, a minute, two later, I can take a re-entry going in the same direction.
Yeah.
And if everything lines up.
Exactly. And that's keeping you less vulnerable. You know what I mean?
Definitely.
All right, cool. Listen, man, this was a great recap. I hope everybody has a good Sunday. Let's go into this week just trading our process, our strategies, right? Let's stay obsessed. You know what I mean, Todd? We talk about it all the time. Like, really continue to perfect your mindset, right? Get, Trading in the Zone, A Disciplined Trader by Mark Douglas. Those books have literally changed my whole entire mind frame as far as looking at this as an auction. And, for everyone out there that's struggling a little bit, don't let that bother you because, I've struggled for years in this game. And, it's literally something that is going to take time. But if you can just stick to your process and just just perfect it, you will reach that long-term consistency. And, and remember, these $1 million traders ain't doing anything different than we are. It's a scalable business. Figure it out at a 1 to 3 contract level and then just scale up.
And log your trades.
Yeah, absolutely. That's a fact, Todd. Yes, log them because logging your trades builds that conviction. Just before we go, there was a time where I got out of trades 87% of the time too early. That means out of 10 trades, 9 of them, I was out way too early. And once I read that number, I realized there was a problem. So we log our trades to measure our success or our failures. So until you log them, right? And it all comes down to trader accountability. Until you take that accountability, you're just going to continuously make the same errors. Nothing's going to change, right? Take the mysteriousness out of trading, right? Mark Douglas talks about it. He's like, a lot of people like to keep this mysterious so that it, it's fun. Listen, take the fun out of this. Just get good at it. Start making big money on it, right? And, and it still is fun. You know what I mean? It just get rid of that mysteriousness. But all right, everybody, go be with your family. Thanks for making it to the weekly recap, right? I will see you guys on Monday.
Appreciate it.